Welcome back. I'm Pratap here. Today is 12th April 2024. In this video, let us evaluate the performance of high liquidity zones generated from our previous report. So in yesterday's report, we have identified 7 high liquidity zones from daily and 75 minutes time frame. Out of these 7, we got good trades from HAVELLS and Cholamandalam Finance. And one trade narrowly we missed, POWERGRID. Otherwise, it could have been a very good trade for us. So we will discuss these trades in detail. And even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept the videos in a playlist, Supply Demand Zone Price Action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new video, we will provide an update in the channel. Now let's get into the analysis discussion. So let's start with HAVELLS. This is a 75 minutes high liquidity zone generated in our yesterday's evening report. This is a rally-based rally. This is a 75 minutes high liquidity demand zone. This 75 minutes demand zone, again we fine-tuned with 15 minutes time frame. So let's go to the 15 minutes time frame. So in the 15 minutes time frame, we have two, actually strictly speaking 3. We have identified 3 15 minutes demand zone. See here we have a rally, base, rally. And again we have a leg candle. We can consider this as a leg, 2 base candles and a rally candle. Rally, base, rally. Again we have another newly created in the recent time. This is the LOTL. So we can say this is the drop, 2 base candles and a rally candle. So this is the way we have identified another 15 minute zone. So total we have identified 3 15 minute zones. Again these 15 minute zones we fine tuned with 5 minutes time frame. So let me show you how we fine tune. Let's start with the bottom one. So here we have a drop candle, 2 base candles and a rally candle. So this is the way 5 minutes zone we have fine tuned here. And here again we have a rally, base, rally, another 5 minute zone. And here again we have drop 1, 2, 3, 4 base candles and again a rally candle. This is the another 5 minute zone. This is the recent zone. In this zone we got the trade. But if you look into this rally, base, rally, this is already a tested zone. But can we take a trade in this zone? Maybe we can plan. See, this is the first test. This is the second test. Each time new zones are getting created from here. See, we have a drop, base, again rally. And where the origin is started from this 5 minute zone. That way we may assume this 5 minute zone could be a high liquidity zone. And moreover, a newly created zone is available. Origin started from here. Probably this might be valid for another trade. That possibility is there. Because the risk is small, there is nothing wrong in accepting the risk and plan for another trade in this zone. Because this is looking like a high liquidity zone, 5 minutes, this fine-tuned 5 minute zone. That way we can assume. It's not guaranteed, but there are higher chances that could be a high liquidity zone. Multiple tests and again new zones are getting created from this area. These are all the indications to assume this could be a high liquidity zone. So that's why you can plan a trade in this. But anyway, prices did not come here because we got a trade from here itself. what is this blue color line I have drawn? That is the entry buffer. The blue color I have drawn is entry buffer for this zone. Generally we take 0.1% from this entry. This is the type 2 entry I fine tuned. From here 0.1% we have drawn this blue color line. Once prices enter into this blue color line, you can plan a trade. See here, the prices entered into our entry buffer area, even went a little more inside, not deep, a little more inside. So definitely our trade is triggered here. But what is the exit criteria here? The 15-minute supply zones are not really very clear here, because the price action is not really, maybe easily that will be violated. See all these price actions. That way, this could be one good choice will be there. This is one good choice. But best thing is use trailing stop loss. You can use 1 minute trailing stop loss, or you can use mix of 1 minute and 5 minutes trailing stop loss. So I followed the 1 minute trailing stop loss. The moment it got the trade, just I want to show you, I just kept it here. See here we have a drop base rally. Prices never reached here. After that again a drop base rally is created. 1 minute zones. We are using trailing stop loss. You clearly learned trailing stop loss in your lesson 19. If I am not wrong, in lesson 19, I clearly explained the concepts related to trailing stop loss. If you did not listen, please listen that our training lesson. So 1 minute trailing stop loss. The next one is created. So now you can delete this. This is no more valid. If this is violated, we can. But see here, prices came, picked up the orders. Second time came, again picked up the orders. Now again a new zone is created. We have a drop, base, rally, hidden. This is a hidden rally candle. At the hidden body. So this is a leg out candle. So that's why this is a valid zone. So now I am deleting this. See again, after that again it picked up the orders. Once again it picked up the orders and it moved. Even third time it came and picked up the orders. If this is violated, we would have exited here. But it didn't happen. Prices further moved up, and again here we have a rally candle, 1, 2, 3, 4, 5 base candles, and again a rally candle. Now here the zone is violated. Now this is the point you need to exit from your trade. But just below again it picked up and further went up. Maybe we need not worry about this. Sometimes you know what happens? It will violate it and further it will sharply go down. That possibility is also there. We should not be greedy, thinking that okay, further prices. Maybe if anybody did not exit here, it could be a lucky day for you. But you cannot trade like this. There could be other trades, the zone will be violated, sharply it will go down. That way you will miss huge profit. So we need to exit in a systematic way. So finally, this is the exit point, and this is the way HAVELLS has given 13,875 rupees profit, which is a 10.5% return on the investment as per one future slot. Excellent ROI we got from HAVELLS. This is as per 1 minute trailing stop loss. Let me delete this. So here we exited. This was our exit. Forget about this. Again recovered and came out and reached up to here. This is not the what you have to really worry, because already it gave 10.3% ROI. See, the moment prices reach 6% ROI, we should be very careful. Trailing stop loss strictly you have to implement when you want to grab more profits. So HAVELLS, this is the first trade. And the second one is Cholamandalam has given 3 trades today. One could have been stopped out. Out of these three, one could have been stopped out, but narrowly we escaped. It's almost as good as it is stopped out, but narrowly. How we will discuss once we discuss about the third trade. And it is also a 75 minutes zone. Cholamandalam Finance. Look into this. This is a drop base rally. This is a 75 minutes high liquidity 75 minute zone. This high liquidity 75 minute zone we fine tuned with 15 minutes time frame. Let us see how we fine tune the 15 minutes. So you have a leg candle rally, you have two base candles and again a rally candle. Rally, base, rally. This is how we drawn the 15 minute zone. Inside this 15 minute zone, look into the 5 minutes order flows. Here you have drop, base, rally, again rally, base, rally. If you observe carefully, see this is an important learning for you people, please concentrate. If you consider both these 5 minutes trades, the first one I considered wick to wick, second one I considered type 3 proximal entry. What could be the reason? Can you think? Don't say risk is the reason, because we are doing we can minimize the risk. If that is the case, I have to go for even type 3 also here to minimize the risk. Already both the zones are having a little extra risk compared to the zones generally we trade with 5 minutes. A little extra risk is there. But why I am using rally base rally, why I am using wick to wick, in drop base rally, why I am using type 3 entry? That means here I am looking for type 1 entry, here I am looking for type 3 entry. What is the reason? This is what you need to understand. See, generally I am supposed to draw this zone also like this, wick to wick. So here risk is much higher. Maybe at least I would have gone for to further radius. Here also risk is high. Maybe that could be one reason I am. Maybe that way, if you are convinced, then why I am not going like this here? See, now also here risk is minimized. Why I am going for type 1 entry here and type 3 entry here? The reason is, I really looked into the order flow where exactly, because risk is high in both these zones, I looked into the real order flow where exactly these zones are having. By going to the type 3 or type 1, I don't want to miss the orders. That's why what I did, I went to the 1 minute time frame. This is the key here. So this is the 1 minute time frame. Now let us look into both these 5 minute zones. So here, the order flow, see the order flow at 1 minute. This is at the proximal of type 1. That is the reason behind why I have drawn wick to wick. See here, this could be the order flow. But you can't keep your stop loss at the 1 minute level. There are higher chances. 1 minute zones will be violated. Prices may go close to the distal line and again it will come up. That possibility is there. That's why you cannot limit your stop loss to 1 minute. Entry you can, yes. The reason is if the order flow is very strong, they just reach and again they move up. They move up. That point you have to observe. So the real order flow is at the proximal line, type 1 proximal line. That's why I have drawn wick to wick here. But see here, here the order flow is at a type 2 proximal line here. Here you have the order flow. That is the reason why I have adjusted up to type 3 proximal. Let me go to the 5 minutes, you will get clarity now. Look here. See, the order flow is at the type 1 proximal. That's why I have written rally base rally till the type 1 proximal. And here, first I have drawn my zone like this. The moment I observed the real order flow here, then I adjusted up to type 3. I am taking trade based on the 5-minute zone. I am not taking the trade based on the 1-minute zone. If I am taking based on the 1 minute, my stop loss will be at 1 minute proximal. So let me delete these 1 minute zones now. Now you got the clarity why I have drawn the zones like this. Sometimes you need to take such kind of decisions. When you feel risk is a little high than what you generally accept at 5 minutes time frames. Go to the 1 minute level, find the real order flows there. There, up to that level, you can adjust your proximal. And here I can't compromise. For this rally base rally, I can't compromise because my order flow is at the type 1 proximal. So that is the reason why I have drawn. But here, my risk will be reduced further if I take type 3 proximal. Definitely prices will reach. The real order flow is at the proximal 3 level. So this is the way I fine-tuned both these zones. Hope this will be a good lesson for you people. At least those who are practicing for all these days. This will be helpful to you, these kind of tips. But remember, go for such kind of tips only when you feel 5 minutes risk is higher compared to your normal way of accepting the risk. Hope you got the clarity. So what is this blue color line? This is our entry buffer from this entry. This is what I added. If prices enter into this area, we can plan a trade. And see what happened today. The prices entered into this area. Even they went beyond this entry area. Definitely you would have taken your trade here. Definitely your order will execute here. Even though it is 9:15 candle. Because some people don't trade in the 9:15 candle. They would have missed this trade. Okay, fine, no issues. If you miss, no issues. The reason is you got one more trade. A clean trade. Prices entered inside this. But where to exit? At 15 minutes target. This is the 15 minutes target. You have a drop, 1, 2, 3, 4 base candles and again a drop candle. Okay, if you want to capture more profit, what you have to do? Trailing stop loss. So exactly the same trailing stop loss is implemented here. Let me show you how it worked. This is the first trade. At 1 minute, exactly 9 o'clock 15 minutes. Those who don't trade 9 o'clock 15 minutes candle, you forget about this trade. But some people who trade at 9:15 candle, placed their orders and got executed, definitely they would have got profit in this zone. How much profit is the question? So it went. If some of you who want to exit just before reaching this zone, your trade would have been exited somewhere just in here or maybe here. Your trade would have been completed. You would have exited for keeping the target just maybe 1 rupee or 1.5 rupee below this, you might have exited. But those who are looking for higher profits, here you got the opportunity. You have a rally candle, 2 base candles and a rally candle. This is a 1 minute zone. Trailing stop loss. But unfortunately what happened? Immediately your trailing stop loss is exited. The stop loss is hit. So you need to exit from your trade. So what is the profit? I am calculating the profit based on this trailing stop loss. So this is the way you would have got a profit. 7,093 rupees, which is 4.8% ROI, return on the investment. See here you got HAVELLS, you got more profit because here futures margin cost is less. This margin cost is a little higher, around close to, here it is I think around 1.2 lakhs or 1.3 lakhs. I didn't remember exactly, but somewhere. And this one is somewhere 1.7 lakhs something, or 1.6 lakhs, something around that. Cholamandala, or maybe 1.8. But anyway, this is the 4.8 ROI we got because future margin cost is more. Here profit is more. Future margin cost is also less. We got even a very good profit. Because the 10% ROI means it is extraordinary. Yesterday we got up to 30%. That is a different exceptional scenario. Forget it. Once in a while we get such kind of trades. But this is a genuine trade. Why I am saying genuine? Because many times we get. This is rarely we get. So it's a luck based. Why I am not saying genuine? It is see, everything is genuine only. But this is a luck is needed here. Here it's a natural. Many times we get. But not regularly. Not regularly, because if you look into the past data, several times we have prices reached up to 10% or 11% ROI. So excellent one we got. And 4.8, 1.2% less than our average ROI, but okay. Because we got one more trade, that is also another 4%, that we will see later. So this is the first trade you exited. And after that what happened? Prices again came. This time, those who wants to take a trade only once prices enter into the zone. You don't want to take based on the stop buffers. You want to take only when price enter, then only you want. Some people trade like that because of their risk management or other reasons. Those people also would have got the trade here. And those who would have kept the stop buffer, maybe even well before you took a second trade. But those who are not using stop buffers, you are very strict, still you would have got a trade here. Prices entered into the zone. Here we have a real 1 minute order flow is there. Exactly here we have 1 minute order flow. See how it pushed the prices. So again, you have to implement stop loss very strictly because this is the second trade. When you are taking the second trade, you should be very careful. We don't know. Prices will reach up to this 15 minutes target because a lot of price action took place. There could be 5 minutes strong order flows also might be there. So strictly follow. So that's why what I did, I am using 1 minute trailing stop loss. This is the drop base rally. If in case if it is hit, I would have exited. Only small profit I would have got. But anyway, this zone is okay. After that, one more zone is created. We have a rally, 3 base candles, and again a rally candle. This is the way you can draw. And this one, removed. So once price hit this stop loss, we would have exited. See the next one, again one more zone is created. We have a rally, 3 base candles, and again a rally candle. So this is no more valid now. And if this stop loss hit, we will exit. But see here, one more zone is created. We have a rally, we have a base candle, we have a rally candle. Now here what happened? See here, the stop loss is hit. See, in case some people may think, okay, these prices will further go. See previous stock what happened? If some people are thinking that prices will go up, I don't follow this trailing stop loss. If you think like that, your profit margins would have come down. That's why when you are implementing trailing stop loss, there should not be any greediness. You have to perfectly execute the moment your trailing stop zone is violated, you have to exit from the trade. Whatever the profit, you have to accept that. If you would not have exited here, see here what would have happened. The prices ultimately further came down. All our profit margins is gone. So this is the trailing stop loss for the second zone. This is the trailing stop loss for first trade. This is the trailing stop loss for second trade, not second zone. Sorry for my mistake. This is the trailing stop loss for the second trade. This is for the first trade. First trade you got a profit up to here. Second trade you got the profit up to here. So this is the way you got the profit. I'm calculating the profit not from the stop buffer. Earlier I calculated from, entry buffer, not earlier. But now I am calculating because prices entered here. Those who are taking trade from here, for their point of view, I just calculated for our reference purpose. From here to here, I calculated the profit. So this is the way. The second trade, Cholamandalam Finance has given a profit 5,937. This is the maximum profit. Your profit maybe could have been 5,000, some 700 if you would have taken a trade with that entry buffer, adding some buffer to the entry slightly. Whatever I am showing in this Excel sheet, the maximum possible, not beyond this. If at all you get any profits, below this you will get, not beyond this. This is the point everybody should understand. Because the statistics we are maintaining mainly because of how much returns, maximum returns, our NeoStock software has given. That data we are capturing. Mostly you will get either the same profit or below the profit you will get, but definitely not beyond this. This is what you should understand. If you are getting the profits beyond this, means you are not following our rules properly. You are taking higher risks, ignoring some rules. That is what the indication you should remember. So this is the way from here to here. It has given a profit 5,937, which is 4% ROI. So after that again prices. So this zone is no more valid now because this is not a high liquidity zone, already tested. Sometimes in the intraday you may take second trade, nothing wrong intraday, but your order flow is very close to here. Already this is the first one is with adding some entry buffer, and second one is prices really entered into the 1 minute order flow fine tuned. So it's a risk to take the third trade in this zone. If anybody would have taken third trade, your stop loss would have been hit. Okay, time being, let me delete. I will draw this supply zone again. I don't want to create a confusion. Now this zone is violated, no more valid. Let me remove this zone also from the chart. Now we have the second fine-tuned 5-minute zone inside the 15. Here also we have a order flow. So definitely we can plan a trade. See, prices entered here. See, in this candle, prices entered into the zone. So we got a trade, second trade. So what could be your target? Your 15 minutes, what could be the recent target you have to see? So I am into the 15 minutes time frame. Your target could be maybe somewhere here. Rally base, sorry. We have a drop, base, drop. This could be the target. This is the supply zone. Let me go to 1 minute. See, this is supposed to be your entry and this is supposed to be your target. So 15 minutes target, up to here prices should reach. But what happened? This is when you are planning a trade. This is what happened when you planned your trade. So your prices went and prices further went. Actually what happens most of the time, there is a rejection and further prices will move up. This is what generally happens, right? But today see what happened in 15 minutes time frame. After we took the trade, prices went more deep and candle is closed. That means what happened? You already took a trade. After you took the trade, prices went more deep. Generally what happened before this candle closes? Prices enter, there is a rejection, prices will go up. That way there won't be any zone will be created. But see, prices, after you took the trade, prices went more deep inside. And here your 15 minutes candle is closed. The moment your 15 minutes candle is closed, now all of a sudden your target is changed from here to here. Now this will become our new target. This is no more valid. Earlier you have a good risk reward. Now you don't have any risk reward. But what you have to do? You have to exit from your trade. Now you should not look for any RR. Whatever the RR, just accept. Even if it is loss, you have to accept sometimes. If it is your stop loss hit, anyway, you will accept the loss, right? If stop loss doesn't hit, still you may get some loss. Suppose if your entry is here. But anyway, your entry is, there is a gap is there. Definitely you won't get loss. So you can't expect prices move beyond this. If prices should move beyond this, your 15-minute supply should be violated. That is not easy. If 15-minute supply is violated, again the trend, everything will be changing. The price direction, everything. Again, market gets a new direction. So because of this newly created supply zone, after you took the trade, before prices closes here itself, you took a trade here. That is what I shown you in 1 minute. There was some rejection and again prices came down. If this rejection, if prices would not have come down, the prices would have entered up. Definitely there could be a big rejection. This could not have been a leg out candle. And our target still remains same. But that is not happened here. Prices came, closed here. And because the 15 minutes candle is closed, a new zone is created. Now you have to exit from your trade. There is no other option for you. But what happened? Your zone is violated, but not beyond the stop loss. See, I have drawn this. I have given you the stop loss values. Every day at the end of the video, I am providing you stop losses for all the stocks. I am providing you daily ATR value. I don't know how many of you people are seriously observing. At the end of the video, maybe the last 2 minutes or 3 minutes of the video, you have the stop losses for all the stocks. All the stocks listed in F&O segment. Calculated 5% daily ATR, 10%, 15%. All the ATRs I have calculated. Even 3%. This is the 3% stop loss. Actually, 2% is recommended for the 5 minutes time frame. But in my testing, I felt 3% is more accurate. That's why I revised the value. That is what I explained you in lesson 19. So today our trade is saved. Maybe we got a very small profit. Most of the amount would have gone for at least maybe 25% of your profit would have gone for paying your taxes and your brokerage charges. But still you might have got some profit. 1 rupee profit is a profit only. That is what you have to understand. There is nothing like small or big. Profit means profit, that's it. So because newly created, see the next candle price is reached. The moment they entered into this proximal line, you need to exit. Without any hesitation, you need to exit from your trade. You should not say, I didn't get RR. Okay, you didn't get RR. But at least your trade is not stopped out, right? You should be happy for that. So you would have exited here. You have to exit. There is no other choice. Now this 15 minutes is no more valid. I am deleting this 15 minutes target. Now no more this is valid. This is only the valid one. So you have to exit here. Because you exited here, you will get a profit 1,437 rupees, which is 1% intraday profit. 1% intraday profit, many people intraday traders, they feel very happy if they get 1% profit. Because they exit with 1%. Some people at 2% they will try to capture the move. But we are capturing up to 6% average, on average. Because high liquidity trades are providing. Now you calculate all the first two trades. You got 8.8% you captured. Even if you include the third one, 9.8% a single stock. But this 1% is a different zone. This 4.8 and 4 from a same zone. That is a different, same 5-minute zones. This is a different 5-minute zone. That's why the third one I didn't specify third trade. The reason why I did not specify third trade in my comment section, this is a different 5 minutes fine-tuned area, and these two trades we are using same fine-tuned area. This is the first trade and this is the second trade from the same zone, fine-tuned 5-minute zone. That is what you have to understand. Why we took second trade is, first trade is moved within the buffer itself, entry buffer itself. The second trade entered into actual zone. That is what you have to understand. So anyway, 1% profit we got from this instead of getting stop loss. See, after that, again what happened? This zone pushed the prices. Now entire 75-minute zone is violated. Violated means pierced here. Price did not close below this, candle did not close. So 75-minute zone is pierced. That means the 75 minutes high liquidity zone is no more valid for taking the trades. This is what you should understand. Pierced zones are as good as they are almost violated. So these are the successful trades. And we very, very narrowly missed a trade, that is a power grid. Power grid is a 75 minutes high liquidity supply zone. Let me show you. So this is the one. We have a drop candle, 1, 2, 3, 4, 5, 6 base candles, and again a drop candle. This is the 75-minute zone. High liquidity zone. This we fine-tuned with 15 minutes time frame. Let me show you 15 minutes. See here we have a rally candle, we have a base candle, and again a drop candle. And this 15-minute zone we fine-tuned with 5 minutes time frame. See here we have a leg candle, medium size. We have two medium size candles, base candles. This is the way we drawn, and a drop. And this is the 5-minute zone. And see here, the prices entered into this 5-minute zone. So already it gave an entry. It is a tested zone. When it gave on 4th April, last week, this zone already gave an entry. After that, it gave a very good profit. So you cannot plan a trade in this zone now because it is already tested. Then how can we say we missed a trade? See that. And again you may ask a question, we have drawn only one 15-minute zone. If there is a second 15-minute zone in the recent time, but I didn't draw any second 15-minute zone. How can we plan a trade? You may ask a question. So please wait. And look into this zone. Rally, base, drop. This is a 5-minute zone. Now let me go to the 15-minute zone, time frame. Is there any 15-minute zone here? No. This is a rally base drop you cannot consider because this is a ERC candle. ERC, it's a very huge, big ERC candle. This cannot be part of the base. This is a large candle. If it is a medium candle, okay, this could have been part of the base, but this is a large candle, failed ERC candle. So without fine-tuning 5 minutes, without fine-tuning with 15 minutes, directly I have drawn a 5-minute zone. And I am saying we just narrowly missed this trade. See today, the blue color line I have drawn is the buffer, entry buffer to this. The blue color price is 284.55 paisa. And the high of this candle today is 284.45 paisa. That means with the 10 paisa difference, we missed the trade. Maybe if you would have gone another 10 paisa or 15 paisa, definitely we would have taken a trade. That is what I am saying. But what you are saying, how we will take? This is not a fine-tuned zone. Yes, that's true, I agree. Still, how we can trade? Still, why I drawn this zone? The reason is, there is a concept, already we discussed a few days back, and maybe a couple of months back, I made a special video, and I put it in our NeoStock terminology playlist. There is a concept called aggressive trade. Aggressive trade means inside the high liquidity zone. For example, this is 75 minutes, high liquidity. We bypassed 15 minutes. That means there is no 15-minute zone. Directly we are going to the 5 minutes. That aggressive trade you can go only when there are some price action clues. If price action clues are not supported, you cannot go for aggressive trade. So what is the price action clue? The rejection just before. See before the blue color line, see the rejections. Rejections means the price movement, how it went down in several candles. And again further came down. And today you see, prices came very near. Today we just missed the trade. We have to accept. You cannot adjust the 10 minutes or 15 minutes and we cannot say the trade is a successful trade. We should not go beyond our rules, permitted rules. Our permitted rule is only up to here, the blue color line. Some people take trades within this buffer area, so it is a valid trade. Some people don't accept these buffers. For them, price should enter into the zone. That is, different people, they follow different rules based on their risk management point of view. But what is the permitted rule? From this blue color line, what I have drawn, if prices enter, we can accept the trade. Those who don't want to accept this much risk, they have to wait until prices enter. Those people will miss few trades. So even the blue color line did not cross, we have to say this is a missed out trade. If another 10 paisa would have gone up, today we would have got a very good profit in this stock. 9 rupees profit. With that 9 rupees profit, there was around, I think, close to 30,000 rupees profit we would have captured based on one lot of POWERGRID. See, from here to here, there is a 9 rupees move. POWERGRID. Let us see what is the lot size. POWERGRID. See, 3,600 rupees. 3,600 into 9. You would have got 32,400 rupees profit. You know how much margin? Maybe approximately, let me say around 1,80,000. Let me say 1,80,000 could be the margin. Because prices came down, the margin value also will reduce. So let me say approximately, it need not be that much. Maybe 1,78,000, something like that will be there. But let me keep 1,80,000. So into 100 divided by 1,80,000. This is one futures margins cost, let us say maximum. We would have got 18% ROI we would have got. Just 10 paisa difference, we missed 18% ROI. That much profit, this is the maximum. Maybe we would have exited a little earlier itself. I am saying the maximum, the opportunity in this stock. Just 10 paisa made the difference today. Many of you would not have drawn this zone, I am sure. The reason is you are yet to learn these concepts. Aggressive trades. You will be learning in another 1 or 2 weeks time period, you will be learning these concepts. But those who want to learn, already earlier videos are available in a NeoStock terminology playlist. So this is the one we missed. And the remaining stocks we didn't get trades. The first one is, let me show you, Hindalco. This is a daily zone. Sorry, this is also 75 minutes. Oh, wait. I selected weekly. Yeah, we have a rally for base candles and a rally candle. Sorry, drop candle. Rally, base, drop. We have a daily zone. So inside this daily, how I fine-tuned? Let me show you. So with 75 minutes time frame, I have fine-tuned the zone. See, we have a rally candle, 3 base candles and a drop candle. We have a 75-minute zone. So inside this 75 minutes, we have 15-minute zone. So please observe here. We have a rally candle, 3 base candles and a drop candle. Rally, 3 base candles and a drop. This is a 15-minute zone. So inside this 15, again we fine-tuned with 5-minute zone. So let me move on to the 5 minutes time frame. So we have a medium-sized candle rally, 2 base candles and a drop candle. So this is the one we can plan a trade here, but prices didn't come. And here I want to clarify one doubt many people are asking. See, every time when I am explaining inside, you are assuming the fine-tuned zone should be inside this zone. That is not true. What I mean by inside is overlap with the zone. It can be exactly inside, or it can overlap with proximal line, it can overlap with distal line. This is the point you should understand. I clearly explained these points in lesson 16, zone confluence. If you skip lesson 16, probably you will learn the concepts in a wrong way. See, whenever I say inside this zone, it is overlapped with the zone. Exactly inside, or maybe overlap with proximal or distal lines. Please remember. For easy understanding, I am using the general English word inside. A technical word, if you want me to use, I can say overlap with the zone. Even inside also can be part of overlap. Anyway, whatever I mean by inside, always remember, it is overlap with the zone. Not exactly inside. Some part should be there inside the zone. That's it. I repeat again, some part should be there inside the zone. That's it. So Hindalco did not enter into the zone. We didn't get a trade. Next one is ICICI Prudential, and this is a 2020 zone. We didn't have the data. So only up to 75 minutes zone only earlier already it is price entered into the 75 minute zone. Now a new 75 minute zone should be created, and inside 15 minute zone should be there. So that is not happened. And otherwise prices should go inside this 75 minutes. There a new 15 minutes and 5 minute zone should create, and prices should come down. And in the next retracement we can plan the trade. So neither things happened. So that is the reason why still we can't plan any trades in this zone, because the data is not, 5 minutes data is not available inside. Even 15 minutes data. Okay, next one is PVR, Inox. So this is a drop-based drop daily zone. So inside we identified a 75 minute zone. Inside means overlapped. See here, this is not exactly inside 75. A part came outside. This is overlap. A part should be there inside. So we have a drop, base, 3 base candles and a drop candle. So this is a 75 minute zone. So inside the 75 minute zone, that means overlap with 75 minutes, we have a 15 minute zone. Let me go to the 15 minutes time frame. So we have a rally candle, 3 base candles and a drop candle. This rally is a medium size candle. 3 base candles and a drop candle. This is the way we identified a 15-minute zone. So inside this 15, again we have, that means overlap with 15, we should have a 5-minute zone. Here we have a rally, 2 base candles and a drop candle, follow through candles, excellent zone. But if you look into this zone, is it a fresh zone? Prices came very near rejection. See the rejection. Definitely another trade we can plan. See here, prices just entered and came down. Just touched this zone. Still, if there is any order flow available, maybe what you can do, fine tune to 1 minute time frame. If price did not enter into the 1 minute time zone, maybe you can plan a trade again. Nothing wrong. That work you please do it. So anyway, price did not enter. So this is about PVR Inox. Next one is SBI Life. SBI Life is 75 minutes or daily? Let me check. So this is a 75-minute zone, or we have a rally candle, 2 base candles and a drop. This is a daily 75 minutes. This is a daily high liquidity zone. So inside we are fine tuning with 75 minutes. We have a drop candle, 3 base candles and again a drop candle. So inside this 75, again we fine tune with 15 minutes time frame. If you look into this 15-minute structures are not really good here, but if you go a little, see here we have a ERC candle as a leg-in, we have a base candle, we have a drop candle. See, several times prices are going and again coming down, again going, again coming down. And see here we have a rally, 3 base candles drop, a new zone is created here. Maybe lower time frame, 5 minutes also might have been created multiple times within this area. That means this 5-minute zone could be a high liquidity zone. Could be. I am saying could be. Based on several price actions, at least this is one way you people can, 80% level you can assume it could be. Sometimes it might be wrong, but at least 80% scenarios we will get a fair idea. See, recently also prices entered inside this area and again came down. So this 15 minutes is acting as a high liquidity zone. But are there any 5-minute zones inside? So let me go to the 5 minutes time frame. See, this is the recent price action. We have a rally, base, drop inside the 15 minutes area. This is the first time prices entered, second time prices entered, third time prices entered, fourth time prices entered. That means this 5 minutes also could be a high liquidity zone. Already 15 is a high liquidity. So that means we have a daily high liquidity. Only 75 fine tuned is a normal zone. 15 minutes is a high liquidity. Inside this 15 minutes, the recently created 5 minutes is a high liquidity. Several tests it gave already. Maybe we can assume. So those who are accepting the risk, because risk is very small, there is nothing wrong in trying. There is nothing wrong in trying one more trade inside this. Those who accept the risk, a little higher risk means not the risk of the zone. The general English word risk I am saying. So there is nothing wrong accepting one more trade because it is supporting multi-testing here. But definitely we should understand at some point it has to be violated. It's not a superpower zone, right? Every time coming and prices going down. At some point it supports few multiple tests. Maybe next time it may violate. That possibility is also there. That's why I'm saying those who accept the risks, those people can try. Nothing wrong. That is what I'm saying. Those people who are concerned, look for other stocks. And remaining stocks we discussed, Cholamandalam Finance, HAVELLS and POWERGRID. So this is about the high liquidity zones, how we got the profits and how we fine-tuned the zones. Some of these zones we have fine-tuned but not got the trades. They might be helpful to you next time. Again, when our report shows the stocks, at least you have an idea how the zones we fine-tuned. Those fine-tuned areas you can make use at that time. Hope this information is useful to you, especially how we identified the aggressive trade in POWERGRID and narrowly we missed the trade today. So think in that direction, always you get a more success. So let's take a break here and continue from the next video. Thank you.